Before we talk about what credit score you need to buy a house, let's make sure we understand what a credit score actually is. A credit score is a 3-digit number that represents your credit history. It's calculated based on payment history, how much of your available credit you're using, length of credit history, types of credit, accounts, and recent credit inquiries. It's not a personality test and it's not a moral scorecard. It's simply a risk measurement tool that lenders use to evaluate how consistently you've handled borrowed money. Because after all, we want to borrow their money, right? The good news is you can check your credit score for free. Most banks and credit card companies now offer free credit score access through their apps. You can also visit annualcreditreport.com to review your credit reports for free, and I'll put a link for that in the description below. There's no reason to guess where you stand. Clarity is what removes fear. Now, let's talk about general credit score ranges. Remember, it's not a report card. It's simply information. So a score from 300 to 579 is typically considered poor. 580 to 669 is considered fair. 670 to 739 would be good. 740 to 799, very good. And 800 plus would be considered excellent. But here's something important. When people ask, what credit score do I need to buy a house? They often assume there's one strict number that determines everything, but there's not. Credit score is one factor, not the only factor. Lenders also evaluate income stability, debt-to-income ratio, employment history, cash reserves, and overall financial patterns. So your credit score alone is not a barrier. It's part of the bigger financial picture. And in this video, I'm going to break down exactly what different loan programs look for and how to position yourself strategically, not perfectly. Now, there's no one magic number that applies to every buyer. Different loan programs have different minimum guidelines, and even then, minimum does not mean optimum. So the better question isn't just what credit score do I need to buy a house, it's what credit score puts me in the strongest position possible. So let's go over the popular loan programs. For FHA loans, a 580 credit score typically allows you to qualify with a 3.5% down payment. If your score is between 500 and 579, you may still qualify, but you usually need a 10% down payment. FHA loans are often considered more flexible when it comes to credit. However, lenders also evaluate your debt-to-income ratio, which is commonly around 43%, though flexibility may exist depending on the full financial profile. FHA can create opportunity, but structure does still matter. Now, for conventional loans, a 620 is generally the minimum for fixed rate loans, while 640 is commonly required for adjustable rate mortgages. That doesn't mean approval is automatic at 620. It just means eligibility typically begins there. Stronger credit scores often mean better loan terms, lower interest rates, and more flexibility. Again, credit opens up options. Now, VA loans are unique. The Department of Veterans Affairs does not set an official minimum credit score requirement. However, lenders still evaluate credit history and typically apply their own internal standards. Most would want a credit score starting around 580. So while there's no federal minimum, most lenders still expect a reasonable credit profile. And as with any loan, stronger credit can improve your terms. Now, USDA loans also don't have an official minimum credit score requirement at the program level. Approval is largely left up to the lender. Many lenders prefer scores in the low to mid 600s, but technically the USDA program itself does not impose a strict minimum. Again, stronger credit creates stronger options. So what does this actually mean? If you're asking what credit score do I need to buy a house, the honest answer is that you need a credit score that aligns with the loan program you're using and your overall financial profile. Because lenders don't look at your credit score in isolation. They look at patterns, which brings us to something important. Your credit score versus your credit profile. Your credit score is a number. Your credit profile is the story told behind the number. Lenders evaluate payment consistency, credit utilization, account age, debt structure, and stability over time. Two buyers can both have a 640 score. One may easily qualify, while the other may need adjustments. Why? Because context matters. A single late payment from 3 years ago is different from multiple recent delinquencies. A high balance on one card is different from maxed out accounts across the board. Credit is about patterns, not punishment. If your credit isn't where you want it, here's the encouraging part. You don't need to have perfect credit to buy a house. You need workable credit. If your score is lower than ideal, that doesn't automatically mean that you're out. It simply means you need a plan. That plan could involve paying down a specific balance, reducing your overall utilization, waiting for an account to age, and avoiding new debt for a few months. And sometimes the difference between a denial and an approval is smaller than people think, but you won't know unless you ask. Now, if you're thinking about moving to the Shreveport-Bossier area and you're trying to understand what living here is like from a distance, well, I know how difficult that can be, and I have been there myself. So I've created a relocation guide with you in mind. It's going to help you understand what living here is like even before you get here, and it also highlights some of the popular neighborhoods and what kind of vibe those neighborhoods offer. So if that sounds like something that would be helpful for you, you can download it for free by clicking on the link in the description below. Now, let's keep going. Here is one of the biggest mistakes that buyers make, and that's assuming that they don't qualify. They delay speaking to a lender, they wait, they hesitate, and this is often motivated by shame or embarrassment. And that's unfortunate because sometimes they're much closer than they realize. The question, what credit score do I need to buy a house, should actually lead to a conversation, not avoidance, because lenders can give you specific guidance, not just general advice, and that clarity changes everything. Now remember, credit is not static. It moves month to month. So if you're planning to buy in 6 to 12 months, speaking to a lender early gives you a headway. You can improve strategically instead of scrambling emotionally after you've already fallen in love with a home. And remember, preparation reduces pressure. So let's bring it back to our main question. What credit score do you need to buy a house? Number one, you need a score that meets the minimum for your loan program, the ones we covered earlier in the video. You need a profile that shows stable patterns and a plan if improvements are needed. There's no magic number. There's a strategy, and strategy beats guessing every time. And here's what most buyers don't realize. Your credit score doesn't just determine approval, it affects something even bigger, which is your interest rate. And even a small difference in rate can impact how much you pay over time and month to month. So now that you understand what credit score you need to buy a house, the next question becomes, should I wait for interest rates to drop before buying a home? Well, if that's a question you've been trying to figure out, click here to watch this video on the cost of waiting for interest rates to drop before buying a home. It might not be all it's cracked up to be.